So we are starting with the second unit of partnership, that is the treatment of goodwill. So first of all, let's look at what is goodwill, how does it work and all. Okay. So what is goodwill? Goodwill is the value of reputation of a firm in respect of profits expected in the future over and above the normal profits. Okay. Let me just take one example. Have you seen any Iyengar bakery in your area? You might have seen, right? Why is there so many Iyengar bakeries in different places? Because that name Iyengar Bakery was the famous name of a bakery situated in some place. The same name has been used by other people to attract the customers. That means that that particular name has some goodwill in it. Got it? In short, I can say that goodwill simply means the reputation that a business will have, that a business has. Clear? Let us say the value of the total business as per my books of accounts is rupees 10 lakh. Okay, but including goodwill, it will increase to rupees 12 lakhs. Why? This difference of rupees 2 lakh is goodwill. Is goodwill to me. This rupees or 2 lakh rupees is what? Is a goodwill. Clear? So this will increase the value of assets in my books, even though it is an intangible asset. Now, what does intangible asset mean? That we cannot see or touch it. Just like this calculator, assuming it to be an asset, I can touch or see it, right? But goodwill is something which cannot be seen, which cannot be touched, but we can only feel its presence in the books of accounts. Because of that, it is called as a intangible asset. It is called as a intangible asset, right? Okay. Now, why is there a need for goodwill in the partnership? Necessity for valuation of goodwill. So, in this chapter, we will learn how to value a goodwill, how much value of the goodwill to be taken in the books of accounts. Now, how to decide on the goodwill? We will decide on the value of the goodwill depending on the future profits based on the data we have of past profits. See, to estimate future, we need some data regarding the past, right? We, if there's a match between India and Pakistan, let's say there's a match between India and Pakistan, how can I say which team will win? How can I predict which team will win in the future? By looking at the previous set. Let's say India has won 13 matches, whereas Pakistan has won only 2 matches. So now tell me which team will win the tomorrow's match. Which team will win? You might obviously say India. Why? Because we are supporting India, sir. No, because the data says that India has won most number of matches when compared with Pakistan. Right? Because of that, I can say that India can win the match tomorrow also. This is what prediction is about. We are using the past data. We are using the past data, whatever we have, to predict the future. That in future, what might happen? Because future is unpredictable. That we know, right? Because we say that future is in our hands. Because of that, this data will be computed using the past data. Clear? Okay. Here also, in goodwill also, we will compute goodwill based on past profits, based on past year's profits. Can for the first year of the business, in the first year of business I can value goodwill? No. Why? Because my business don't have any data. My business does not have any data. Assume there's a business which has started on the first year. Let's say Geo. Did people know Geo before it was opened? No. When they gave a free policy that take the SIM and use the internet for free, at the time people came to know about it. People bought more and more SIMs. So Geo's value went on increasing day by day because more and more people were using their SIMs, right? Because of that, the value of the SIM has increased. So that means they have some past data now to value their future. Because of that, Geo can value their future depending on the past profits it has earned. In this case also, depending on past profits, we will predict the value of goodwill based on the profits of past. Clear? Okay. Now, why is there a need for valuation? Why should I value, sir? Sir, valuation yak ಮಾಡಬೇಕು. See now, there may be some cases in which valuation becomes really important. Okay, these particular points, these particular 4 points, that is change in the profit sharing ratio, admission of partner, retirement or death of a partner when the business is dissolved or sold. All these cases have different units for it. So in those chapters we will see how to deal with it clearly. Okay, I know that the chapter's name is treatment of goodwill, but I won't be dealing it over here. In the textbooks, they have dealt all these individual cases in this chapter itself, but I won't be dealing it here. I will be dealing it only when the specific chapter comes up, because for all these 4 units, you have separate units mentioned in the textbooks. Clear? So we'll see how to treat the goodwill over there. Now, recommendation of AS when on recognizing goodwill. So, when can a goodwill be recognized in the books of accounts? I think we have AS 26, which deals about the intangible assets. Intangible assets. See, AS is not really important because it will be dealt in the intermediate. But what does this AS say? What does this AS 26 say? AS 26 says that When can you recognize goodwill? When all of the below conditions are met. Only if the below conditions are met. That it should be clearly identifiable. I should be able to identify the goodwill. In that case only I can recognize it in my books of accounts, or else I cannot show it as a goodwill in the asset side of the balance sheet. Then second point, future probable economic benefit. Whatever goodwill I have should give me some benefit over in the future. If I have something which is not giving me any benefit, how can I treat it as an asset? Right? What is the main definition of asset? Anything which we have in our hand which might give us the future economic benefit. But if I have some goodwill which is not at all giving me any benefit in the future, why should I take it as an asset in the books of account, which is wrong? Okay. Then it should be able to measure reliably whatever value of goodwill I have. I know that my business has reputation, but what if I'm not able to value it? Money measurement concept. Remember, if something is not able to be measured in terms of money, I cannot take it as a item in the books of accounts, be it in the P&L account or be it in the balance sheet. Right? So it should be measured reliably. I should be able to pinpoint what is the value of goodwill. Clear? Okay. Now, let us look at some methods of valuation. Let us look at some methods. So we have so many methods. Okay. First of all is super profit. Then we have capitalization. Third, we have average profit method, and the fourth is annuity method. Okay. So basically in the examinations only these three becomes really important. Okay. Annuity is not going to be dealt over here. Annuity will be dealt in the intermediate level. Clear? But I will teach you how to do it the annuity method also, because this will be linked with your maths. In maths you have what? Time value of money. Remember, time value of money. In that chapter annuity is clearly dealt with. Okay. So refer that chapter and then come to this for the annuity method. Okay. Yes. So let's start. Illustration number 1. Lee and Lawson are in equal partnership. Okay, that means they are sharing the ratio at 1:1. Okay, they have agreed to take Hicks as 1/4 partner. Now they are admitting a new partner who is supposed to be given 1/4 of the share. For this, it was decided to find out the value of goodwill. So I have told you that when is the goodwill requirement? During all these cases. Right. Now in this question we are dealing with what? We are dealing with admission of a partner. So, Messrs. Lee and Lawson earned profits during 19 to 2022. For all the 4 years, they have given you the profits that has been earned. Fine. Then, on 31/12/2022, the capital employed by Messrs. Lee and Lawson was rupees 5 lakh. The rate of normal profit was 20%. Now, what does the normal rate of profit mean? That I will tell you while dealing with the super profits method. Okay. For now, just understand that the capital of the firm was 5 lakh rupees and they have a normal profit of 20%. Okay, the rate of normal profit not there. The question says that the rate of normal profit is 20%. What I will tell you, wait. Required. What is required to be done? Find out the value of goodwill following various methods. So now using the various methods, we need to find out the value of profits. So always start, if the question says find out the value using various methods, always start with the average method, because whatever answer you have for the average method will be used in these both methods. Okay, will be used in these both methods. Okay, so fine. So let's start with the average profits method. Computation of goodwill. First method, it is my average profit method. Okay, let me zoom this out. Okay, so look over here. They have given us the profits. I will just write down the profits first of all. 19, 20, 21, 22. Okay, profits are 1,20,000, then 1,25,000, 1,30,000, and 1,50,000. Okay, these are the profits given to us. Now, we need to give some weightages for each of them. Now, how to give weights? The profits past to this will have the most weightage, that is 4. We have 4 years, right? So, go on reducing it. These are called as what? These are called as weights. Okay, this will be dealt in statistics. In statistics, you will have this method in the mean and averages. Now, Now, since I have given the weightage, why is weightage given? Because for me, the profit of 2022 will have more weightage than the profit of 2019. Because this profit will show me the current state of affairs of my business rather than comparing it to the last year. I cannot give an equal weight. Why? Because in all these years, my business has evolved too much. My business has changed too much. My business has improved too much. Right? Because of that, I will give the most weightage to the recent years and then go on reducing it for the remaining years. So the last year of the profit computation will have a least amount of profit. Okay. Sorry, the weightages. Then now multiply these both. So 1,28,000 to 1, that is 1,20,000 itself. Then 1,25,000 into 2 equals to 2,50,000 rupees. Then 1,30,000 rupees into 3 equals to 3,90,000 rupees. Then 1,50,000 rupees into 4 it equals to 6 lakh. Okay. So we have found out the time weights. Depending on time weights, we have found weighted profits. This is called as my weighted profits. Depending on the weightage, I have found out the weights of each of the year's profits. Now add all of those. 1,20,000 plus 2,50,000 plus 3,90,000 plus 6 lakh equals to 13,60,000. This is what? This is my weighted profit. Total of weighted profit. Total weighted profit. Okay. Now I have got the total profit, but this is not the goodwill value. First of all, we need to find the weighted average profit. This is the profit for what? This is the profit for 4 years. Now I have to find the average profit for each year. So how do I do it? So average weighted profit will be 13,60,000 rupees, whatever answer I have got, divided by 4 years. Simple. This is how you find the averages. Divided by 4 equals to 3,40,000 rupees is the profit. Sorry, total weighted profit for 1 year. Now, is this the value of goodwill? No, this is the value of profits. Now, to find out the value of profits, we need something which is called as years of purchase. See, whenever new partner is admitted to the partnership firm, he has to bring in capital. Okay, why? I will tell you in the admission chapter clearly. Okay, but he has to bring in some capital. Okay, so this will be valued on depending on the year of purchase. For how many years will he be bringing the profits in? Will he be bringing the goodwill for? For 3 years purchase, 4 years purchase, 5 years purchase. Okay, so that will be mentioned in the question. That will be clearly mentioned in the question. So depending on how many years profits, we will value our goodwill. So for my example, this example, I will take 3 years. Okay. So we will compute it for 3 years of purchase in this case. Okay. This is the example that I have taken. But for you people, in the question, it will be clearly mentioned. In the question, it will be clearly mentioned for how many years of purchase goodwill should be valued at. Okay. For my example, I will take 3 years now. So goodwill will be equals to 3,40,000 rupees into 3 years of purchase. That will be 3,40,000 into 3. That is rupees 10,20,000. Okay, I think I made a small mistake over here. Okay, just have a look. So don't divide by 4. So divide by total of the weights. I forgot over here. Sorry. So divide by 10. So this will be rupees 1,36,000. Okay, the small mistake I have done over is divide by 10. It is the weights and not by years. Okay, divide by the weights because I have weighted. It's a weighted profit, right? So divide by weights. Okay, now this will change. So it is 1,36,000, 1,36,000, and this will also change. So 1,36,000 divided by into 3. That is 4,08,000 rupees. Now this is what my goodwill is. Okay, for the next 3 years I am purchasing the profits of the firm. I am purchasing the incoming partner or the partner who is admitted to the firm is buying 3 years subsequent profits as a goodwill. Clear? He is subscribing to the goodwill of the firm. This I will clearly explain in the admission chapter. Why to bring in goodwill? What is the reason for the new partner to bring in a goodwill? Clear? Okay. So this is the first method that we are dealing with. Clear? This is the first method. So what to do? Take all the profits, assign the weights to them, multiply this with the weights, you find the total of weighted profits. This you need to find what? After this, average profit, because the method talks about average. right? So average it with what? With the weights, with the total of weights. 1 plus 2 plus 3 plus 4, that will be 10. So add it, then you'll get your average weighted profit, not goodwill, average weighted profit. Then multiply this with number of years of purchase, whatever is given in the question, and you will get your goodwill value. Clear? This is what the first method says. Now let's go on to the second method, that is my super profit method. Now what to do with super profit method? I will tell you. Compare your firm's profit with remaining firm's profit. Now how to do? See, first of all, I have found out the average profit. What is the average profit of my firm? As per the above part, this is my average profit. 1,36,000 is the average profit that I am dealing with. Right? Now what is the normal profit? To find out the normal profit, what we can do is, if some other firms are also having a capital of rupees 5 lakh, if some other outside firms are also having a capital of 5 lakh, and we have a normal rate of profit at 20%, that means overall industry has a profit percentage of 20%. So that means what is the total profit earned by the other firms? So how to find it out? Simply 5 lakh into 20% will be what? 5 to the 10. So 1 lakh will be called as what? My normal profit. This is the normal profit. That means the whole industry is earning how much? The whole industry is earning a profit of only rupees 1 lakh. Only a profit of rupees 1 lakh per year. Right. So now what I will do? I will write down my normal profit also over here. Equals to rupees 1 lakh. Right. Now compare. See, whole of the industry is earning how much? Only rupees 1 lakh as a yearly profit. But how much am I earning? I am earning 1,36,000 rupees. So the difference, whatever is there, is what? Is the reputation that I have, is the advantage, or is the goodwill that I have over here. Okay, the difference between this, that is my average profit minus my normal profit, is what is called as super profit. How much more profit am I earning compared to the industry? Right. So now 1,36,000 minus 1 lakh rupees will give me what? 36,000. So I am earning 36,000 rupees more than the industry standards. I am earning more by how much? Rupees 36,000. Now this is my super profit, not my goodwill. How to find the goodwill? Again, goodwill will be equals to super profit into 3 years of purchase. Again, the same assumption, that the question asks for 3 years of purchase. I am multiplying it. So how much will that be? 36,000 into 3. That is 1,08,000. So 1,08,000 is the goodwill value that I have. Clear with this? Okay. This is the second method. Coming to my third method, it is called as my capitalization method. Now in this I will compare what? See, in the second method, in the super profit method, what did I compare? I compared my profit with industry profit. Right? Whatever industries of the same nature we have, the same profits we have compared. Industry standard was how much? Rupees 1 lakh. But my profit was how much? Average profit. It was rupees 1,36,000. That means I am earning more profits. I am earning more by rupees how much? 36,000, which is called as what? Super profit. I am earning more profits. So that profits, if I multiply with 3 years of purchase, I get what? My goodwill value. Okay. Now in capitalization method, just like before, we will compare the capitals now. Now sir, how to compare it? Now tell me, as per the question, what is my capital? My capital is rupees 5 lakh. Right? Okay. Now let us assume for a average profit of, what is my average profit? What is my average profit? It is rupees 1,36,000. Right? This is the average profit. Suppose if I divide 20%, what will I get? I will get the capital required to earn a profit of 20%. Right? So 1,36,000 divided by 20% will be what? 6,80,000. 6 lakh 80,000 rupees, right? So I was just dividing this with the industry standard of profits. See, in simple terms, 6 lakh 80 into 20%, what do you get? You get 1 lakh 36,000. What is this? Profit. So basically I am reverse computing the capital. I am reverse computing the capital. This is what? This is my capital. Right? Okay. This is not my capital, industry capital. So that means to earn a profit of 1,36,000, industry is using a capital of rupees 6 lakh. But what is my capital? My capital is rupees 5 lakh. My capital is rupees 5 lakh. So that means when industry to earn a profit of 20%, the profit of 1,36,000 at 20%, the industry needs a capital of rupees how much? 6 lakh 80. But what is the firm's capital? This is not average profit. This is industry capital. I will just write it as industry, or I just mentioned it as normal capital. Normal capital. This is my firm's capital. How much my firm's capital? This is rupees 5 lakh. So industry wants a capital of rupees 6 lakh 80. But whereas I, to earn a profit of rupees 1 lakh 36,000, need only rupees 5 lakh rupees. So who is better working? Who is better working? I am better working because I am earning same amount of profit at a lower capital, which is a good thing. I am putting less investment to earn more profits over here, right? But industry needs how much? Industry needs 6 lakh 80. 6 lakh 80 capital is required for the industry, but I need only usually 5 lakh rupees. So the difference between these two will be what? Will be the capital profit that I am earning. So the profit will be how much? 1 lakh 80,000 rupees. How did I get this? It is 6 lakh 80 minus 5 lakhs. Minus 5 lakhs. This is the capital requirement that I need. That is the benefit I have, right? So this will be called as what? This will be called as my goodwill in this case. In this case, please do not multiply average number of years of purchase. Please do not multiply number of years of purchase. Please do not multiply it. We are directly straight away getting what? We are straight away getting the goodwill over here. That is 1 lakh 80 is what? My goodwill. Clear? Okay. The last method is what? The fourth method is what? The annuity method. Now compute the present value. Compute the present value multiple for 3 years. So why 3 years? I should take it based on years of purchase. I will tell you what to do. But don't worry. Number of years of purchase. So 3 years was my years of purchase. Remember? Okay. So depending on that, find out the present value at the rate of how much? At the rate of 20%. So what is 20%? The normal profit, remember, we had taken as per the question. As per the question, there was a normal rate of profit at the rate of 20%. So that's what I'm taking over here. Now how to compute it? So it is the formula will be PV is equal to, the PV factor will be equals to 1 divided by 1.2 into 1 plus 1 by 1.2 raised to 2 plus 1 divided by 1.2 raised to 3. Sir, how did you get 1.2? How did you get 1.2? 20%. 20% is equals to how much? 0.2. 20 divided by 100 will be what? 0.2 plus 1 is equals to 1.2. Okay, this plus 1 is a standard thing. Or else I can also write this as this way. See, 1 divided by 1 plus 0.2 raised to 1 plus 1 divided by 1 plus 0.2 raised to 2 plus 1.1 plus 0.2 raised to 3. Okay, this is my PV. Okay, this is how you need to compute the PV factor. Why did I stop at 3? Because we are computing it for 3 years of purchase only. If it was for 4 years, again 1 by 1.1 plus 0.2 raised to 4. And so on, we need to continue for number of years. But in this case, only 3 years is required. So I am stopping at 3 years only. Clear? Okay. Now how to do this in your calculator? I will tell you. Take a calculator. Okay. We know that 1 plus 0.2 is how much? 1.2. Okay. Press divide is equals to, you get a value of rupees how much? 0.833. Okay, press m plus, do not touch anything and press m plus. Then again press equals to, press M plus, press equals to, press M plus. This I did 2 times. So I got 2 different answers over here. Just press MRC once. The total will be 2.106. This is what my PV factor is. This is what my PV factor is, the present value factor. I am pulling it to the present value. Whatever values of future were there, I am pulling it to the present value now. That is how much? 2.106. Okay. If you are not getting the answer, please try the same steps after pressing MRC once or twice. Press MRC 2 times. Clear whatever M you have on the calculator, right? It should go. It should go. It should be invisible. After pressing MRC, press on once again, or all clear. Then start once again. 1.2 divide equals to M plus equals to M plus equals to M plus, and press MRC once. You will simply get this answer. Okay. If you are not getting it again, that means please change your calculators, because only in some calculators of Casio it will work. In all the calculators this formula won't work. Please change your calculators. Clear? This is really important for examination, because the same calculator will be beneficial for your intermediate also. So please remember this. Okay. Now going ahead. Now the goodwill will be 36,000. Sir, what is 36,000? The profit, the super profit the firm is earning for how many years of purchase? For a PV factor of 3 years. For 3 years of purchase. That will be 36,000 into 2.106. That is 75,816. This is what my goodwill is. Okay. See, I have not gone in depth with annuity method. The reason being, this will completely be dealt to you in your time value of money once. Okay. Coming to accounting, this will be dealt in the financial management in your intermediate syllabus. Okay. For the foundation purpose, understand only this much. It is enough for you. Okay. I won't be going in depth of rupees inflation or the change in the value of money. The money goes on depreciating. All those things I will not touch. Clear? This will be dealt in the financial management of your intermediate. If you want, just you can refer the books. Okay. I'm not lying to you people. So these are the 4 methods. Okay. The question will clearly specify which method to follow. If the question is not specifying anything, then follow average method. Okay. If the question is not specifying anything clearly, please go with the average profit method. Okay. Okay. Good. So we're done with the first question. Then going ahead. Question number 2. Okay. Illustration number 2. The following particulars are available in respect of the business carried on by Rathore. They have given us the capital invested amount. How much is the capital invested? Okay. Trading results are given to us. Profit, loss and profit. This is a loss. So I will just mention it in negatives for now. Okay. Just to remember. Then market rate of investment is given to us. That is 10%. Rate of risk return on capital invested in the business is 2%. The risk is given. The return is given. Okay. Then remuneration from alternative employment of the proprietor. Rupees 6,000 per annum. Per annum 6,000 is being earned. Okay. If not engaged in a business. If the proprietor is not engaged in a business, how much he would have earned for the same efforts he is putting in? For the same efforts he is putting in, he would have earned 6,000 per annum. Okay. Now, you are required to compute the value of goodwill on the basis of 5 years of purchase of super profit of the business calculated on average profits of last 4 years. Now we need to find out average profits of each year. Okay, in the before method we have studied it, right? And depending on that, we should find out the super profits by comparing the industry profits with my profits, my average profits. Clear? Okay. So we need normal profit, we need average profit. For average profit, what do we have? We have these figures. Yes? Okay. There's a twist over here. Okay. See, whatever profits are given to you are the profits of the previous year. But you know that goodwill will be computed for the future years, right? For the future years, we will predict it. So you should find something called as future maintainable profit. Now what does this FMP mean? Future maintainable profit. So as the word says, in future, how much profits can be consistently earned? Right? How much profit can be consistently earned? Now why do I need to find this? Because there might be some factors in some of the years. Which might vary. Let us assume this loss whatever is incurred over here is because of a factory lockdown. Where amount of rupees 20,000 was a loss. Okay. Because of this, after considering this loss, my profit is what? My loss is how much? Rupees 6,000. My loss is rupees 6,000. But assume that, will this lockdown or will this loss be incurred in every year? No. No, right? In the future, this might not repeat again, because I now know that what to do, what not to do, right? Because of that, this loss will not be incurred in the future. So that means I need to change the loss over here. I need to add back this to find out the actual profit, actual future profit to find out the future maintainable profits and goodwill. See, why I'm doing this is because I need to find out goodwill for the future years by using the past data. But there might be some details in the past which might be affected due to some circumstances. There might be some strikes. There might be some non-recurring activities that has happened in the past, in the past, because of which my profits have varied too much, which might not be repeated in the future. So I need to adjust my profit by adding or deducting it. By reversing the transaction. In simple terms, I need to reverse all the non-recurring transactions in the future for the future profits. Okay, and then I need to find out the total profit for all the years and divide it by number of years. That I will do. How to do? See, in this question, there are no uncertain transactions given to you. So we are good with it. Okay, so let's start. See, first of all, I done all the profits. Computation of future maintainable profits, FMP. Okay, so for year 2019, 20, 21, 22. Okay, so what are the profits given? 40,000, then 36,000, less 6,000 and 50,000 rupees, because in 1 year there was a loss, right? Okay, now tell me the total profits of all the years. 40,000 plus 36,000 minus 6,000 plus 50,000 rupees. That will be rupees 1,20,000 rupees. Okay, so this is what my total profit for 4 years. Okay, see, this can also be solved with using the weights, like I told you, 4, 3, 2, 1. This can also be done. Okay, no issues. But as per textbook, I am following the same method. So now find out the average profit. So my average profit is equals to how much? 1,20,000 rupees divided by 4 this time. If you are following the weighted average, divide by 10. Remember. Okay. So 1,20,000 divided by 4. That is 30,000 rupees each year. But sir, why have they given us the profit of the proprietor? The remuneration of the proprietor. See, let us assume one thing. That what if the proprietor was not working for the firm and he has employed someone on my behalf? On the proprietor's behalf, he has employed someone. So how much would he earn? He would earn rupees 6,000 per annum. Because he is putting the same effort that I am putting. For my effort, there is no benefit that I am getting over here, right? But if I am employing someone on my behalf, I have to pay him what? I have to pay him salary or remuneration. So that remuneration I am considering it now. Less salary or remuneration for each year. That is rupees 6,000. This is per annum. Remember, because I have divided by 4. This is my per annum's profit. Okay. So less 6,000 will be how much? Rupees 24,000. This is called as average maintainable profit. So that means if in future, if I leave my work and employ someone else over here, I have to pay him how much? 6,000 in the future. In the future, for each year, as per the question, see, per annum I am paying how much? I am getting how much if I am employed somewhere else? 6,000 rupees. So that means if I employ someone, a new personnel in my place, I should pay him how much? 6,000 rupees in the future. Because of that, my profit in the future will be maintained at how much? Rupees 24,000 rupees. Clear? This is my profit. Now let us find out the normal profit. Normal profit will be normal profits. That is the industry profits. How much? What is the capital employed by me? Rupees 1,50,000. So for a capital of rupees 1,50,000, how much is the return that I am getting? How much is the return I am getting? 10% or 12%? 10%. How much is the profit I am earning? How much is the industry profit? 10% or 2%? It would be 12%. Why is it 12%? Because, see, always remember this, okay? Whenever I say profits, there will be market return plus the risk involved by me. How much ever risk is involved in the capital invested in the business. So that risk I should be adding. So the total profit will be how much? The summation of these both. The market return plus 2%. Clear? So that is called as RM plus R. Clear? This will be how much? 12%. The market rate plus the risk involved in the capital. So 12%. So into 12%. That will be 1,50,000 into 12%. That is 18,000 rupees. Okay. Now compare my average profit with the industry profits. What is the average profit I am earning? I am earning rupees 24,000 for a capital of rupees 1,50,000. But as per industry, how much is the profit? Only rupees 18,000, sir. Only rupees 18,000. That means how much more am I earning? How much is my super profit? How much is my super profit? It is 24,000 my profit minus 18,000, that is industry profit. That will be how much? Around 24 minus 18 if I do. It will be rupees 6,000. It will be rupees 6,000, sir. Got it? So rupees 6,000 is what? Is my super profit. But did I get my goodwill? No. How to find goodwill? Goodwill will be 6,000 into number of years of purchase. For how many years I am purchasing it? Because this profit whatever I have is for the per year basis, is per year basis or per annum basis. I need to find it for how much? For a 5 years of purchase. For 5 years of purchase I need to find out how much is my goodwill. So multiplied by 5 years of purchase. That will be 5 6 30. So 30,000 is about what? My goodwill. Clear? Now the next question from illustrate your test your knowledge. That is question number 1. Wise, clever, dull. Wise, clever and dull by trading in a partnership, sharing profit and losses at the ratio of 4:3:3. So I will just mark this down. 4:3:3. Okay, respectively. The account of the firm were made up to 31st December every year. Fine. So we are following what? Again calendar year. We are following calendar year. Okay. Yes. So the partnership provided inter alia that on the death of a partner, the goodwill was to be valued at 3 years of purchase. 3 years of purchase of average profits of 3 years. So 3 years average profits we need to take up to the date of death. Up to the date of death after deducting 8% capital employed. Sorry, 8% on capital employed, that is my interest on capital and fair remuneration of each partner. Fine. The profits are assumed to be earned evenly throughout the year. Fine. Why is this hint given to us? I will tell you why. On 30th June 2022, Weiss died. Rest in peace. And it was agreed that on his death to adjust the goodwill in the capital account without showing any amount of the goodwill in the balance sheet. Okay, this particular part will be dealt while doing the admission questions. Clear? How to show goodwill in the books of accounts without opening any goodwill account. It was agreed for the purpose of valuation of the goodwill that fair remuneration of work done by each partner is rupees 15,000 per annum. So 15,000 rupees per annum per partner. That means for a year, for a financial year, or a calendar year, for 12 months, how much is it? 15,000 into how many partners? 3 partners, right? Into 3 partners, that would be how much? Rupees 45,000 per annum. For one single year, it will be 45,000 rupees. Okay, taking all 3 partners into consideration. Now, and the capital employed would be rupees 1,56,000 rupees. Okay, the capital employed will be how much? 1,56,000. So I will just mark this capital employed. For computation of what? For computation of interest on capital employed at the rate of what? At the rate of 8%. Okay. Clever and dull were to continue the partnership. So out of this, L has died. So clever and dull will continue the partnership, sharing profit and losses equally after the death. So the profit sharing ratio has changed to 1:1 ratio. Then the following were the amounts of profits of earlier years before charging interest on capital employed. So before charging interest on capital employed, these were the profits. Okay, 2019 till 2022 the profits are given. Remember, we are following what? We are following calendar year. Remember, we are following calendar year. This is really important for this question, this particular question. Why, I will tell you. Wait. You are required to compute the value of goodwill and show the adjustments thereof in the books of firm. Okay. So now they have asked to find out the value of goodwill and show the journal entry basically in the books of firm. This journal entry I am skipping over here. I am skipping it intentionally over here, and I will teach this in the subsequent chapters whenever admission, retirement or death comes up. Clear? Okay. So see, whatever journal entry they are talking about over here will be in depth dealt with in those chapters. Okay, so don't worry about it. Main hu na. Okay, now let's look at the question. So what should we do now? So they have asked to value the goodwill on what basis? So valuation basis was given over here, right, somewhere. Is it average basis? The goodwill was to be valued at 3 years of purchase on average profits of 3 years. But sir, they have given us 4 years over here. What to do? I will tell you what to do. When did Weiss die? On 30th of June. Rest in peace. On 30th of June, he was dead. Right? Now, let me just draw a timestamp. 30th June 22. He died, right? Okay, so on this date he was dead. Now I will just draw a small timeline for you people. He was dead on this date. Now, on what basis should be the goodwill be valued? Profits, average profits of 3 years up to the date of death. So 3 years up to the date of death. When will my financial year or my calendar year end? In this case, it's on 31st of December, right? But they have told us to take for 3 years. So 3 years will be, according to me, up to the date of death. Remember the word up to the date. So when was he dead? On this date. So go 3 years back. So I will take 36, 21, then 36, 22, then 36, 20, 21, 20 and 19. Okay, so basically I will have a period of 3 years. Why? 1, 2 and 3. Right? 3 financial years, 3 years I have got. Not financial year, not calendar year, but 3 separate years up to the date of death we have found out. Right? Because this was the date of death. Now I need to find out the profits for all these years. Now how will I do that? Upon that I should average it now. I should average it. But as per the question, what profits are given to us? For each of the calendar years, they have given us the profits. For each of the calendar years, they have given us the profit. Right? But the profits are not given, but they have given us a small hint over here. What is the hint? See, look at this. The profits are assumed to be earned evenly throughout the year. That means, whatever profits we have for each of these years, are evenly divided. That means if I multiply it with any time weight, 6 by 12, 3 by 12, 1 by 12, the profits will be equal in each of the month. The profit earned will be equal in each of the month. This is an assumption. In real life, in real cases, this won't be the case. Profits won't be equal for each month. It might depend on different circumstances, be it your expense or be it your incomes, right? A business will not have fixed number of customers for each month. This is the general reality. But as per the question, they have given us an assumption. What? That it is assumed that it is earned evenly throughout the year. That means for each month I am earning same amount of profit. So using this assumption, what I will do is, I will compute the profits for each of this period. How can I do that? See, first way is, find the profit from this part to this part. See, between this, if I have to draw, between this what will I get? I will get 31st December 19. Then over here I will get 31st December 20. And I will here, I will get 31st of December 21. Right? So now I have the profits from what date to what date? From this date to this date. From this date to this date. Right? There is some small portion remaining over here. What can I do? Simply take the amount into 6 by 12. Can I do? Yes, because for all these 6 months, see, it's a period of 6 months over here, right? It's a period of 6 months over here, from this date to this date to this date, right? So for 6 months, compute the profits. That's it. So for the year 2019, for 6 months, what is the profit? For 6 months, what is the profit? Compute. How will I compute? Simple. 67,200. Where did I get 67,200 from? 67,200 into 6 by 12 for 6 months. For 6 months I am computing the profit. How much is it? 200 into, divided by 2 I can do. Okay, so that will be 33,600. Okay, then going forward. So now what I can do, I need not compute 6 years once again. What will I do? From this period to this period, do I have the profits from I can say 1st of Jan 20 till 31st of December, I have the profits for 20. Yes sir, over here they have simply given us the profits straight away. So why to matha piti, why to do once again? So simply take it over here. So for this period, how much is the profit over here? 75 600. Then again simple, here also 72,000. Yes, straight away I can take it. Now this small portion remains. This is again a portion of how many months? 6 months. Yes, compute 6 months. See, I won't be teaching you the calendar over here, okay? Please understand it by yourself. Okay, so 6 months again. Now from December till this year's mid, so that will be how much? That will be again 62,400 into 6 by 12 equals to into 6 by 12, that will be 31,200. 31,200. Now add all of this. So now add all of this to find out the total profits. Total profit for 3 years up to date of death equals to 33,600 plus 75,600 plus 72,000 plus 31,200. So that will be 33,600 plus 75,600 plus 72,000 plus 31,200. That will be rupees 2,12,400. Yes, I have got the profits for 3 years. In your textbook, what they have done is they have computed for each of this period. For each of this period, they have computed separately and added it. Okay, and in below that, alternative view is also given, just like how I have computed over here. Similar approach is also given, but follow this approach because this will be the most easiest one, and this will solve your answer really quick. Clear? Now let's find out the average profit. Average profit is equals to 2,12,400 divided by 3 years equals to 70,800. Now what else is remaining? Remember there was something given to us that it was wait, okay, 8% should be charged on capital employed and fair remuneration of each partner is how much? Each part is how much? 15,000 per annum, that is 45,000 rupees. We have computed, remember over here 45,000 rupees. Yes, so capital employed would be rupees 1,56,000, so that would be 1,56,000 into 8% equals to how much? 8%, 12,480. 12,480 is the total interest computed. Okay. Now I need to deduct this. Why should I deduct this? Because we are assuming that we are computing the future maintainable profits. And if from tomorrow the firm gives remuneration and the interest on capital, how much will the profit be on the tomorrow's basis? So because of that, goodwill is a prediction that we do for the future. So because of that, I will deduct all of this, assuming that I am paying this from the past. I am paying this from the past. I am assuming that and I am deducting it. So less what? Remuneration that we have computed already, that is how much? Rupees 45,000. Then less interest on capital, it is 12,480. Okay. So deduct these both and find the average maintainable future profit. 7,800 minus 45,000 minus 12,480, that is 13,320. So this is what this is. Average maintainable profit. But is this the goodwill? No sir. I have to multiply what? Average, sorry, number of years of purchase. So as per the question, what is the number of years of purchase? Okay. 3 years of purchase should be valid. 3 years of purchase of average profits, right? So I have got my average profit. Now to find the goodwill is equals to 13,320 into 3 years of purchase, that will be 13,320 into 3 equals to 39,960. This is how we have found out our goodwill. Clear? Okay. So by this we end the chapter. Remember, in this chapter there are so many questions for admission, death and retirement. Okay, they have given you some sample questions. So please don't refer that questions. Okay, because these questions are clearly dealt in all those respective units. The further unit is admission, retirement and death. In those chapters, the whole thing is clearly dealt with. Okay, so please don't bang your heads for those questions. Don't wait, just trust me. In the next units, all these things will be deeply dealt with. Okay, yes, thank you.